Hello traders, Gary Wagner with the gold forecast here. It is Wednesday, December 29th, approximately 9:30 a.m. here in Honolulu, Hawaii, and this is the daily report. Gold continues to trade higher, trading about $6 to $7 higher this morning, currently at 1410, 1411. Ask bid spread. As you can see, we're looking at a 120-minute candlestick chart. We have our previous top. This is, of course, our record top. Our record top, of course, is here, but our previous top at 1407. And I think that you can see we have surpassed this. What I would like to see, at least on a closing basis, it is important to me that we maintain this particular tract, and I would like to see it close above 1407, 1408. On today's report, we will talk a little bit about my forecast for next year, but also we will begin to wrap the year up, all here on today's daily report. Traders, we are looking at our daily chart in which I've got our Elliott wave count in a commentary which I posted live on Kitco.com today. I talked about the fact that I believe that what we would see would be a New Year's rally. As we take a look at this chart, what we can see and what I'm pleased about is the fact that this lower support line, which I happen to feel is fairly critical, in fact did hold over this last week. As you can see, we came very, very close, but at the same time, it was able to maintain that. Now, based upon some Elliott wave projections, I believe that it is possible that we could see this wave itself, if it continues to gather steam. Of course, first it has to take out this record top here. This is that 1431, 1430 area. And of course, if it can take that area out, I would expect it to have the potential to go as high as about 1473. And in terms of a time parameter, if we simply look at our time scale, that would probably be by first quarter of next year, meaning March. I have just turned this chart into our Japanese average chart, our Henkin Ashi chart, and as you can see, it gives it a little bit of a different look. Of course, the trend line bottom support is still holding, but what is interesting, at least on this chart, is that when we go ahead and take a look at it and blow it up a little bit, you can see that we now have the kind of candles that we would like in an average chart, and that is a candle. You can see that they're starting to grow in size, and then of course what we also look for is the absence of this lower wick. And what that means with the absence of the lower wick is, in essence, the low and the open are relatively close, and it has closed near the high of the day. Traders, of course, we are long from 1385 and 1382. And as I spoke about yesterday, I believe that it might be prudent to take a look at trailing our stops up a little bit higher. I've got our data box out so we can take a look at these various lows that we see here. And as you see, 1400, 1400, these different lows. This low here is at 1382, and this low here is at 1364. Again, low 1361. So in order to be safe, we want to place it below 1400. If we're going to maintain this upward status, we really want to see it trade above 1400. So traders, we can go ahead and trail our stops up to 1380, 1380 on a protective stop. That will at least guard against any degradation or loss of basic capital and protect our investment. At the same time, should the market continue to trade higher, we will be positioned to maximize on our profits. Again, traders, go ahead and move your stop to 1380 on a protective stop. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow for another daily report. Bye-bye.